Good morning. It's 8:47, 7:47 Central at 99.9 The Big Dog. The first day of autumn. Dale Smothers hosts a program every Saturday morning on this station, The Big Dog, and it's called Retirement Matters. And Dale likes to stop in once a month to talk finances and the stock market, things like that. So got a few minutes to have a little chat this morning
Let's do it. You mentioned the first day of autumn, and as a matter of fact, in August, we typically mark the first day of winter in the financial markets. We talk about this a lot, but this particular winter, Larry, has felt like a tropical winter, if a winter at all. A lot of the artificial intelligence spending, which is, for layman's terms, it's technology, right? It's just advancement in technology. That spending has caused a lot of optimism in the markets. We have seen all-time high again and again and again. On the backs of the Fed cutting rates, which was the big news last week, the Fed rate cut has sent the market even higher. So we talk a lot about Fed rate cuts and think, what's going to happen with the housing market? You know, theoretically, the housing market should be benefited from lower rates. Well, ironically, and this happens often, but ironically, the 30-year mortgage has likely risen due to the Fed rate cut. And it's all because of where the 10-year note has went. Now, we're not going to get into the weeds of that today, but I'm telling you, it's not inevitable that the market in the housing market, for instance, is benefited from this rate cut. Not yet, at least. Mortgages may still be a little bit higher than we hope. They may not be coming down anytime soon simply because of the Fed rate cut. We'll see what's going on. Now, most people have the questions around what should we be doing with our retirement accounts? 401ks, IRAs, they seem to be doing really well. Should we be doing anything at all right now in the spite of what's going on with the market, with it being higher, the Fed rate cut, that hopefully will send it higher? Is there anything we should be doing? And the answer to that is most likely yes. Rebalancing your portfolio right now makes a lot of sense, Larry. If you have seen stocks or mutual funds continue to go higher, take a look at where your risk is right now, because those things that have went higher are likely in a risky position. And you don't want to get too exposed to risk in these highs of the market if you're close to retirement. We talk about 59 and a half being that golden age. When you become 59 and a half, you have the ability to control your 401k much more than you ever did before in your life. Being able to look at other alternatives like IRAs, for instance, and picking exactly what you own in those funds are going to make a lot of sense for you as you approach the age of retirement, whatever that is for you, 62, 65, 67. It's all up to you on when you retire, but you got to make sure you manage these funds in the right way as you get closer to retirement to make sure that the market doesn't wreck your retirement.
So I guess a conservative attitude for anyone that's close to retirement would be probably appropriate?
Oh, sure. I mean, and the benefit of lowering interest rates in the next few months is actually that your bond funds, which are safer by nature, are likely to be benefited from lowering of interest rates. The stock prices of those bond funds are likely to go up. It's an inverse relationship between rates and prices of the bond market. If you have questions around this, the main thing to sit down with somebody who knows, sit down with somebody who can understand this and help you. Clearly, we can help with that. R.D. Smothers Wealth Management, 270-600-PLAN. If you have questions, want a second set of eyes on your portfolio, we're happy to help. But the bottom line is don't just let the music continue without trying to figure out where your seat's going to be. If we're playing musical chairs here, we want to make sure that when the music stops, and there will come a day when it does stop, or it maybe slows down a little bit, that you have a seat to set in for your retirement success.
Very good. Catch Dale Smothers Saturday mornings after the news at 9 o'clock. Good job on explaining that. I had some of those very questions, whether I need to come out of my conservative investing process right now, because I've been pretty much since the first of the year, I went conservative. But my 401k is still growing quite nicely.
Still growing, yeah.
It is.
And the good news is it really depends on, Larry, it depends on your specifics and where you are in your journey. We hope you never retire here in Big Dog Country. But if you're close to retirement, if your thoughts are that retirement's right around the corner within the next 5 years, now is not the time to run out and get aggressive just because the market's doing well. I also don't think you should be digging a hole and burying your money in the ground either. There are conservative approaches to investing, and we help with clients all the time on that particular front. Being able to put your money to work, but do it safely to where if the market does have a bad day and it wakes up, and for instance, today's probably not going to be the best day for the market. It looks like people are going to start taking profits from last week's run up. The market's set to open at 9:30, probably a little bit lower. People don't panic. That's the objective. Don't panic.
But
have a plan.
There's always tomorrow.
There's always tomorrow.
Always tomorrow. Dale, thank you very much.
Yes, sir.
Saturday morning after the 9 o'clock news, Retirement Matters, our friend Dale Smothers right here on the Big Dog. Good morning. It's 8:52, 7:52 Central. Birthdays are coming up next.